Chapter 16. Not only equitable, but effectively progressive.
It is important to note that the ABT tax differs from all other tax reform proposals, and very dramatically in some cases. Nearly all flat tax proposals suggest a rate between 10% and 20% on salary incomes, which would be both inequitable and focused on too small of a tax base. A national sales tax, as presented to Congress as the Fair Tax Act of 2003, which did not pass, advocated for a 23% tax on certain goods. But this too restricted the tax base to an estimated total of only about $7 trillion, way too small. And the recent proposal for a wealth tax, 2% or 3% annually on all wealth, is not an effective solution on several levels. Though the proposed wealth tax percentage appears small, it is not, in that it unequally targets the wealthy and is only levied on their assets and accounts, a very small tax base. It would not leverage technology, would be difficult to collect, and is unjust. Additionally, it would provide a disincentive to creating wealth and abundance, which is not what we want at all. History has shown that broad-based abundance and wealth generation can be of great assistance to society. A more effective philosophy is to levy taxes upon individuals and companies as they use the economic infrastructure of the U.S. to create wealth, and not simply for possessing it. So, the ABT tax is unique because it is rooted in technology, based upon the broadest tax base possible within the economy, and philosophically efficient. It is a wholesale shift of the conceptual and mechanical elements of how a society taxes its citizens. However, one concern for the ABT tax approach will be that it allegedly throws the concept of progressive taxation out the window with the bathwater. The fact that everyone is taxed at the same rate makes it sound like a flat tax, but upon closer examination, there is much more to consider. The concept underlying optimal tax theory is that a progressive tax, specifically a tax rate that increases progressively as income increases, is fairest in a society. But in our current tax system, with its narrow tax base and labyrinth of special interest loopholes, progressive taxes are ineffective, create inequitable tax burdens, and in many ways work against the natural forces of the free market. The flat rate of the ABT tax, however, is surprisingly progressive in most cases, as it harnesses the power of the free market in a simple fashion instead of working against it in a complicated way. Let us look, for it is a straightforward concept and phenomenon. Over decades of study, the data has consistently shown that the more an individual earns in salary, or the larger their wealth grows, the more transactions they will execute in a year. So the higher the income or wealth level held, the greater the total number of transactions completed annually. Look at the estimates of Professor Feiger, previously mentioned as an esteemed economist and early pioneer of the transaction tax, as he calculated the increasing ratio of turnover transactions as annual income rises, up to and beyond $280,000. Ratio of transactions to income by income group. To see this graph of ratio of transactions to income by income group, go to the disruptingtaxes.org website. These findings have held remarkably true over the decades and demonstrate a simple concept. Those with more money will deploy it more often and in more numerous ways. Simply put, the wealthy have a strong tendency to buy and sell, and then sell and buy again and again. They execute more transactions with turnover as they use the superstructures of government, and as a natural extension of this economic activity, they pay more taxes in an equitable manner. To illustrate the concept, say that a household of a family of 5 earns $100,000 in a year, and their living expenses approach every penny of that. In essence, this means that the household has a small turnover of transactions. $100,000 goes in and $100,000 goes out. This household would pay only about $2,000 in tax. Now imagine a similar family of 5 whose household garners $600,000 in income. Let's say $200,000 goes into living expenses, retirement accounts, and other savings. That leaves $400,000 to deploy freely into the marketplace, and much of it will likely turn over in the economy many times within a year. Statistically, this family is likely to purchase stocks, real estate, larger ticket items such as cars, boats, etc., collectibles such as art, antiques, etc., and more. They're likely to invest in entrepreneurship when they purchase goods and equipment from a small business. And here's the great trick of it. This family is just as likely to sell these same goods in any given year and then use the proceeds to purchase yet again. It becomes clear that as income and wealth increase, so too do the ratio of deploying each dollar and the number of banking transactions executed. And under the ABT tax, each transaction is taxed, and so the wealthy can pay their equitable share. The more the wealthy or businesses use government systems to earn money and achieve lifestyle goals, the more they pay in taxes, with estimated multiples of transactions being up to 40 times. This is the remarkably consistent activity that creates economic turnover and generates more tax revenue, fair, consistent, and effectively progressive tax revenue. If a family has a $600,000 salary, then the salary tax is $6,000. But if the excess $400,000 in the family is turned over 10 times, then under the ABT tax, they'd pay tax on $400,000 turned over 10 times, with an additional $40,000 of tax. So in total, $46,000 in tax. This is still far less than what they are supposed to pay now on the $600,000. In the 37% tax bracket, they'd be expected to pay $222,000 in income tax, but would likely be able to take advantage of numerous legal strategies to reduce their effective rate. Alternatively, with an ABT tax, there is no gaming of the system, as the wealthy carry their burden in a progressively proportionate manner, and no one is unduly burdened either. Now, it is true that some wealthier individuals might simply stash their wealth away in investments, not deploy it within the broader economy, and in turn save themselves from paying some taxes. You can picture Scrooge McDuck counting the coins in his coffers. But it is also true that if the proverbial sword of Damocles of a 37% tax rate was not hanging above their heads, or rather their bank accounts, many individuals would remove their wealth from shelters and use it more freely. Tax evasion, both legal and illegal, goes up with the tax rate, just as tax evasion goes down as tax rates are lowered. This is the beauty of the ABT tax, as it is the lowest possible rate with the broadest possible base. Remember the concept of the Laffer curve, which asserts that government revenues will decline as tax rates rise, because the incentive to work will decline and incentive to avoid taxes will increase. As Arthur Laffer expressed in its simplest terms,
the Laffer curve is the relationship between tax rates and total tax revenues.
There is far less incentive to hide wealth from a tax rate of 1% than from a tax rate of 37%. So, the small minority of wealthy people who would not generate significant numbers of financial turnover transactions yearly would likely become even smaller. To summarize one more time, currently, 150 million people, collectively earning about $12 trillion annually in salary, are paying 86% of all the tax revenue collected by the government. Under the ABT tax, all 330 million Americans and companies would contribute in a small or large way to the total circulation of 600 trillion or more in transactions, depending on their level of income and wealth. And the level to which that individual or company uses the economic infrastructure of the U.S. to earn wealth or engage in a lifestyle will then equal the level to which they pay taxes. This is the fairest tax structure conceivable.